Hi everybody, this is Tom Willard with the video lesson of the week. This week's lesson is going to be how to short a stock, and in particular I'm going to be talking about a technical breakdown. One of the key things I teach is that as a market participant, the more tools you have, the better off you are. So if you have the flexibility to go both long and short, traditionally, a lot of people just like to buy and hold, which is going long. But if you have the ability to go short so that when the market is going down you can make money, you become that much more powerful as a trader, and of course as someone who can really build their income and wealth on a daily basis in the markets. Before I continue, please read this trading and investing disclaimer. You can pause the video here if you need to and read through it. Okay, welcome back. This is a daily chart breakdown. So this is a daily chart of a stock, which means that each bar here represents 1 day's trading action. Okay, and basically this stock was moving lower. You can see it moved pretty aggressively lower, and then it stopped in this area here, which I'll call a support area. Okay, it popped back up, came back down, and it couldn't go below this area here. Now what does this mean? Well, let's stop and pause for a second. What this means is that the price of this particular stock couldn't go lower. Very basically, right? So what does that mean? That means no one was willing to sell it below that price, okay? Or there were enough people that wanted to sell in this area, but there were enough people meeting that supply and saying, hey, I'll buy it here, to drive the price back up. And so that's what happened. It drove it back up here, almost came back up to this high here, and then it started weakening again. You can see this weakening and this arrow indicating as we're melting lower here and coming back down to the support area. Well, what happens is the people that bought here, possibly they're thinking, okay, we're at a make or break period, and a lot of times people put their stops here below here, and that's a totally another concept and something that contact me on the website if you want more information, but that's a much more detailed concept. But in this particular case, this stock weakens, comes down to the support area, and when it breaks the support area, we call it a technical breakdown. And when this happens, you see this explosion and all this pent-up supply up here. People start running for the exits, and as you can see, there's not a lot of demand. No one wants to buy this thing in this area. There's not enough people to buy it to satisfy all the selling, and so the price goes lower. And you can see here this explosion past the support area that is really a no pain gain. Look at this, day after day, right? It opens, goes lower, opens, goes lower, opens, goes lower, and continues until you get this massive red bar day, which is a big range day, and there's a lot of pain in this bar, because if you didn't sell here to get out of your long position, chances are you just see your account going lower and lower in volume, or in value, right? So this works both ways. Now this is a technical breakout to the upside. It's the same thing. It's just breaking past a resistance area. This is a support area. Resistance area is the flip side of things. So I'll do another video on that in the future, but hopefully you found this useful. As always, make sure you visit my site to sign up for my free trading tips and the programs I have there. Thank you for visiting this video, and as always, contact me at any time, Tom@TomWillardTrading.com. Have a great week.